Thank you, Dominic. Hi, Pat LaVecchia, CEO and founder of Oasis Pro Markets, 25 plus years investment banking at Credit Suisse, JP Morgan, Bear Stearns. We're a multi-asset digital ATS. We'll be launching in March of this year, and we're based in Darien, Connecticut, and also we're a full-service investment bank. Thank you. Going back to the original question, we didn't get into this for the technology improvement of blockchain, which is obvious. It's very simple. Perfect data, lower cost, zero counterparty risk, faster payments, and over time, the investor base will grow. So it's an evolution of the technology of electronic transactions right now to the digital space utilizing technology. But frankly, our team, and when we started this journey down the digital ATS side, we were focused on DeFi and what was happening in the DeFi space. And that's what we're most excited about because there's a lot of interest in regards to some disintermediation, but also increased efficiencies utilizing DeFi. So that was our approach to this. We can do instantaneous settlements right now. We can settle in digital cash. We can do instantaneous settlements with our custodian at Anchorage. And on the DeFi space, it's not just verbiage on our part. We also are very involved with one of the oldest DeFi platforms called Maker, or the Maker ecosystem, who's also an investor with us now called UDHC. So we're thinking beyond blockchain and improvements and electronic trading. What we're thinking about is the next step. Now it's moving to Web 3.0. We've been on Web 2.0 for 3 years. We're about real world assets into DeFi. That's where it's going to get excited. On the regulatory front, I would add, I'm sure with the rest of these guys, because our bills are quite high, we speak to the regulators all the time. I think the improvement over the last 3 years of their knowledge base is fantastic. They are forward thinking. The grayness of the regulations, in my opinion, is going to continue for the next 2 to 3 years. And our approach is to be heavily regulatory and compliance forward, because at the end of the day, along the lines of the ATS proposals that came out yesterday, we believe as an ex-Wall Streeter that despite what's occurred in the limited guidance, that eventually the SEC, CFTC, FINRA, and other governing bodies are going to have their fingerprints all over this, and we welcome it. Yeah, and I would just add, I agree with what's been said, but because look, we haven't launched yet, but the problem in the industry, and through not through lack of effort, is lack of liquidity. I mean, issuers are being posted, nothing's happening. And eventually a tipping point will occur. A lot of our focus is on large companies, multi-billion-dollar companies, in regards to enticing them into this industry, utilizing the blockchain because of the efficiencies that were described earlier. That's our focus. That's our approach. And then obviously incorporate DeFi into that to the best of our knowledge as we work with the regulators on multiple fronts. But a tipping point has to occur. I completely agree. Eventually the public markets will catch up. But, from an institutional standpoint, the institutions are there. The custodians are there for digital securities because they're already handling Bitcoin and ETH. They just don't see the demand push from the institutions. When that occurs, they'll be able to turn that on very quickly. We often hear NASDAQ, New York Stock Exchange, eventually getting into this market from a equity standpoint. We completely see that coming. Yeah, again, when the institutional demand is there. And frankly, we think the tech is there as well for that. So eventually there'll be a tipping point. Our approach is larger deals. In order to have a successful market, you need counterparties to the transactions on both sides. So I think, eventually it'll catch up. It's not there now, unfortunately. But again, that's the exciting aspect of being, in a nation industry as it grows. And we may be where crypto was 5 or 6 years ago, when a lot of folks were shaking their heads. But hey, Gemini just got an ATS license yesterday, right? That's a huge positive, I think, for this industry.
I was
Frankly,
about to say, yeah. I was about to say,
just one last comment. What happened with the SEC yesterday in regards to the proposals? What it's telling me is that the approach we took to be regulatory and compliance forward, like everyone else on this panel, was the right bet as well. Yeah, I would just add, we've been speaking to market makers since the fall of 2020, and they're all sniffing around the space, the traditional like Virtu and Citadel, et cetera, and the more crypto focused like Jump, as Richard had mentioned. I completely agree. They're none of the ones I mentioned, but a recent discussion I had with the group was they're more excited about NFTs than digital asset securities because of volume, because they're seeing volume there, and that's really what market makers are drawn to. That being said, I do think some are seeing an opportunity here to dip their toe, maybe from an investment standpoint. I really don't see them risking capital as of yet in these markets for digital asset securities, but eventually that'll come. And but there are other DeFi approaches for liquidity that could be incorporated into an ATS, and we're exploring those right now. If I could jump in, thank you. First of all, I think what Alan and his team did at INX in raising all that capital, go through the SEC and an S1 was tremendous. Somewhat counter to Scott's comments, we're not seeing it in regards to the crypto investors wanting to get into as of yet, because we haven't launched, but we've been having a lot of discussions with groups. We're not seeing that crossover. In fact, when companies come to us, because there's adverse selection, honestly, to raise capital through the blockchain, those are not the groups that we're working with. We decide we're not the right venue for them. What we're trying to focus on is those that can pull investors in. And we think that's how eventually you get liquidity, et cetera. We've been looking at the other platforms. There are about 7 or 8 out there. And some are really focused on like Reg CF, for instance. And they have a lot of issuers, but they're not actually raising capital. So again, going back to the earlier comments about tipping point, we think that tipping point is drawing in some of these large players. And I agree with Scott that a year ago, it was non-existent. Now you've seen a couple of $75 million Reg A plus deals tokenized. You've seen, money's raised on the blockchain. But it's in our opinion, it wasn't because it was a blockchain traded token. It's because the issuer had an installed user base, and that user base was drawn into the tokenization. But again, eventually, what's going to happen is in 5 to 10 years, we're going to look back and say, well, why didn't the market move to this space much earlier? Because we're going to have a lot of positive cases. We're going to have success stories, and it's going to be ubiquitous in regards to this technology. I mean, there's no doubt about it. Even as we speak to very large firms, large investment banks, they see it. It's just a question of when. So I hope Scott's right. We just haven't seen it yet. We're excited about it. We're doing the same thing. We're going down that path. We've already started the process. We think it's a exciting space, and Oasis Pro at the end of the day, we have the ATS, but we have broader ambitions. We're moving into other areas, and we think that's certainly a tipping point. ErisX, LedgerX, CBOE, FTX. There was another one, TrueX, I believe. They've all been acquired recently, specifically for crypto derivatives. There's a tremendous amount of demand out there. So others on this panel may be doing the same thing, but we just hired, we expanded our team with derivatives and swaps experience here for this very reason. Mm-hmm. We already have the infrastructure built for 365 24/7. It'll be up to the issuers, the way we're approaching it, to determine, because these are private markets, so you can put up restrictions in regards to trading. Really up to the issuers. We're focused on the globe, but not putting feet on the ground in Asia and Europe necessarily. It's more about having strong partners on the ground and bringing our regulatory compliance and our tech savvy into some types of partnerships. But we are thinking about 365 24/7. We're ready for it now, and I'm sure Scott and Alan and everyone else on this team is ready for it. And when we launch, what we've heard from issuers is similar to what Scott just said, which is, hey, let's make sure everything's working properly in regards to our institutional base or investor base. They're comfortable with it, and then eventually move to 365 24/7. But I agree with Alan. It's going to happen, and it's one of the benefits, right, of smart contracts, which is what we're working with. Eliminates poor documentation. It's real-time data. Why can't you trade if Elon Musk comes out with some comment or Twitter post on a Saturday night, and rather than wait till Monday morning? So I mean, the tech is there now for that. Yeah, I agree with everything Richard said. Certainly on the lending platforms, think of it as peer-to-peer margin lending opportunities. DeFi allows for that. There's also staking opportunities to create yield. There's paired trading in terms of AMMs, automated market makers, to provide liquidity. There are a lot of very interesting yield enhancement protocols that are on the market right now, and that can be incorporated into different securities. So we're looking at some opportunities right now that are yielding within a range anywhere between high single digits to mid to high single digits to low teens, which obviously in the current environment, at least here in the U.S., would be extremely attractive, utilizing the DeFi space. So yeah, a lot of great companies out there. Fireblocks today, I think it was today, announced another $500 million raise. They're doing a tremendous amount on the custodial side with more traditional institutions, and that'll just, in our opinion, turbo boost this, the growth into DeFi. Despite where the prices are right now, all this being said, if you look at token prices, we're in crypto winners. So despite that, we're all here big believers in the blockchain and the opportunities with the tokens going forward. If I may just quickly, in regards to family offices, generational wealth, most generational wealth is in real estate. I think it's 80 to 90% of most family offices. Many of their holdings are in real estate, and again, it's over generations. So I just concurring with Scott's comments. We're in discussions with a number of family offices. Most of it revolves around tokenizing real estate, cash flow, structured products. We think the use cases there are strongest versus just equities. But we're seeing a tremendous amount of interest, and family offices tend to be at the forefront of new venues like cannabis. A lot of family offices got into cannabis back in the 2000s, and now the same things happened in crypto and eventually digital asset securities. But the hook that we've seen is real estate, because these family offices know real estate really well. I just want to thank you, Dominic, the folks at ARC, my fellow panelists. We need more of this, and there's ARC conference schedule is filling up already for the remainder of the year, so I'm quite excited about that, as digital asset securities or digital assets in general, away from crypto to crypto, becomes more part of the mainstream discussion in this universe. So I want to thank all of you for being a part of this from an educational standpoint, and at the end of the year, I'd look forward to a year out from now and looking back on 2022, which I do think will be a pivotal year.